Hello and welcome to Fintech Chatter, the show where I connect with fintech leaders to talk about their secrets to success. I'm Dexter Cousins, your host and the founder of Tier 1 People, the executive search firm dedicated to connecting high-growth fintech companies with exceptional people. With a track record of filling mission-critical roles, Tier 1 People is a trusted partner to many of the world's most recognizable fintech brands. Welcome to our special series on tackling housing affordability. We're showcasing some of Australia's most promising fintech startups, and today I'm joined by Golan and Robbie Baskin of Frontya. Guys, welcome to the show.
Hi, Dexter. Thanks so much. Great to be here. Thanks for having us.
That's great to have you guys. Look, I guess before we kind of go into some of the kind of root causes of housing affordability, maybe you could tell us a little bit more about Frontya, how long you've been around, a little bit about the solution that you've got.
Absolutely, Dexter. So just a bit by background, I'm American. I moved over here to Australia from the States with my wife and 3 kids just before COVID. My background's in prop tech and fintech. And when I moved here, I dove into the property market, quickly realized that it is very different here than probably anywhere else in the world, certainly America. But what really caught my eye was that Australian residential is the largest asset class in this country, yet there are so many barriers and restrictions from actually accessing it. And the further I dug, the more I found out that actually what the problem is yes, we've got a price problem, but the real problem is the deposit. So there are excellent borrowers out there that are earning great incomes, but just don't have enough of a deposit to get into the market. So what ends up happening is they're wait on the sidelines trying to save up some more cash, at which point the market flies past them, or they end up buying something much smaller than they can actually afford. So I went out to try solve that. I came up with Frontya. In its simplest form, what we do is we will double a customer's deposit. We will go 50-50 on the deposit, stamp duty, and LMI if they choose to do that. And so that really unlocks their full borrowing potential and maximizes their purchasing power. I've known Robbie for about 20 years. Robbie is a data scientist by background. I'll let him explain his journey. But I approached him with this thesis and asked him to do some back testing results. And he came back to me 2 days later and said, "This is unbelievable. There is a massive problem and a huge opportunity as well." And that's kind of the nexus for Frontya.
Awesome. So, Robbie, tell me a little bit about your background then and kind of what you bring to the kind of equation of Frontya.
So yes, as Nia said, spent most of my career as a data scientist, also a qualified actuary, and get very excited when there's lots of data that surround problems, which I think the property in Australia, there's a ton of data that we leverage. And it's different to other markets, like in Germany, for example, it's very hard to get access to property data, which we'll get into in sort of how we leverage data. But I think when Nia approached me, was about 4 years ago about this idea, I think Nia comes at it from very much what's the benefit we can provide customers, but what got me very excited is what's the benefit we can provide investors, because this is effectively a two-side solution here. And I think we sort of touch on housing affordability. There very much is the deposit problem, but a lot of that deposit problem, is caused by property prices growing faster than wages, and there's many drivers of that. But one of the biggest drivers is the level of property investment in this country. I think about 36% of the demand for property comes from property investors, compared to 15% for first-time home buyers. And so for every, I think it's $2.4 put in by a property investor, there's $1 put in by a first-time home buyer. And so I thought, is there a way that we can develop a product that is a genuine alternative to property investment? Because if we can do so, then we can start to attract that $2.4. And instead of competing against the first-time home buyer, we can actually arm the first-time home buyer. And so I very much saw this as an opportunity to design a product that is a genuine alternative that can actually enable that. And so that's got me very excited about this. And it kind of speaks to, I guess, the genesis of Frontya, which is, what's the right customer solution? What's the right investor solution? Because if you can get the trade-off between those two perfectly priced, then we've got something that's really magical. And so what I did to kind of enable that was we took 30 years of historical property transactions. It was about 2 million transactions. We back tested hundreds of different product structures to try to figure out what's the best structure that gives the customer what they need in a way that's financially advantageous for them, but also gives the investor what they need. And after 6 months of simulations, we kind of landed on this concept that Nia explained, 50-50 for 25.
Right. So let me kind of get this right just in my head so I've got the concept right. One of the big challenges has been the rapid increase of house prices, which has been pretty much driven by the huge amount of property investors that we have versus first home buyers. And therefore, rather than competing against each other for a property, you've developed essentially an investment product that enables property investors to partner with first home buyers and them go in for the property together rather than against each other. Would that be the right kind of summation on my side?
Yeah, that's just a couple of points to clarify. We have set up a fund, a managed fund, which
Right.
will be launched then of this year, and that will be a vehicle for property investors to put their investment dollars and therefore arm first-time home buyers or second-time home buyers. We've got a number of divorcees as customers,
Got you.
and so I think that's more the nuance. Just coming back to cultural differences between here and the States, and just kind of what drove a lot of this as well in the background. It amazes me that Australian residential is $11 trillion and it is the largest asset class, yet there's no institutional path to actually access it from a asset class perspective.
Got you.
Whereas in the States, you've got a dozen REITs that are launched, every month, so to speak.
Yeah.
And so, if we could create a vehicle that could capture that, give it the right risk reward returns to our investors, while also enabling home buyers, that was the goal that we set out on.
Yeah, and I think, and just on that, I think there's solutions out there that kind of marry the investor and the first time home buyer together. But for us, I think that provides a lot of friction when we examine those products. What we wanted to do was effectively put ourselves as like a fund manager in the middle. So
Got you.
what means is that investors put their capital in, we act as the fund manager, work with the home buyer to find the right type of property that suits the returns that we require, and then provide that funding to them. And there's a lot of mechanisms behind that that we can get into more detail on because there's a lot of really interesting, I guess, or I wouldn't necessarily call it conflicts, but things that investors want that home buyers don't want, home buyers want that investors don't want, and we have to design a product that actually caters for both
Okay.
parties.
Well, do you want to maybe share some of that now, Robbie?
Yeah, definitely. So I think the first thing is I think like 70% of the market or 65% of the market is people buying homes, and so about 30% of the properties out here make sense from a capital growth perspective. And so the product that we've designed is one that gets I guess a benefit from the home price appreciating. It's not one that gets benefit from a rental yield. And so what that means is the investor cares about the property having capital growth, whereas the first-time home buyer only cares about that to the extent they're buying a home for a financial reason.
Yeah.
But in many cases, the first-time home buyer is buying a home, for a personal reason. And so how do you navigate that conflict? Because the investor doesn't want to overpay for something that isn't going to give them the right return. But the first-time home buyer also wants to make sure that it suits their family. And so what we do is we've got this concept called an entry price limit, where before a home buyer can purchase the property, it has to be approved by us. And with that approval, we come back to them with this risk-adjusted price, which is what would it make sense if we were to get just capital growth exposure to this property. And so the home buyer can then go out and bid on the property. And if they exceed that entry price limit, then our upside starts from that entry price limit. If they buy below the entry price limit, then the upside starts from the purchase price. And so what that does is it means the investor's protected from overpaying, but it still enables the customer to get the property they want, even if it doesn't make investment sense on the investment lens. Naturally, the next question after that is, well, how do you protect against sort of underbidding and therefore just kind of generating an unfair profit on our side? And so what we do, the two KPIs that the investment team are tracked by is one, IRR on the portfolio. It's very important that we achieve the right returns. But two, we want to make sure that no more than 50% of our customers buy above the entry price limit, 50% below the entry price limit. So it's always, a fair approach that we take to developing these entry price limits that oscillates around the market price and ultimately incentivizes the customer to buy the right property at the right price. But if not, then at least our investors get protected.
Cool. So, Nia, what are some of the successes that you've had so far?
Oh, that's a great question. We've had a number. So interestingly, in the last couple of weeks, we helped place a New South Wales police officer. So this was someone who grew up effectively homeless and has worked his way into a beautiful place here in Sydney thanks to our help, and he could not be any more appreciative. And when we get thank you notes from customers like that, that is incredibly rewarding, as you can imagine, and humbling. One of our first customers, early customers, was a single mom up in Queensland. She was post-divorce and looking to buy a house. And so we helped her buy a beautiful house up there for about $1.7 million. Fast forward 22 months later, and she sold that house and walked away with $300,000 of cash in her pocket. Obviously we got our share. The house appreciated by about $400,000. So we got $100,000 plus our capital back. But from her perspective, she got to enjoy this house. She got this incredible cash benefit, and she realized her dreams of actually living in the school district that her children needed to live in. So I think just hearing those customer stories, it reminds us of why we started this business, and it's incredibly exciting in terms of where we're going in the next 6, 12, 18 months as an industry.
Awesome. So what are some of the challenges that you've faced so far as well, Nia?
Absolutely. So, this is a new product, new category. Dexter, like you said, there's a lot of people that are tackling this, but that does mean that we're up against some big incumbents. And so just getting them to understand who we are, how it works with the mortgages, et cetera, that has certainly been a journey. But I think probably the biggest challenge we've had is finding the right capital that is aligned with this type of risk return trade-off. I think, as I mentioned earlier, we are launching our managed fund at the end of the year. And ultimately, we want to go down a path of getting that rated and opening it up to retail investors, because we think ultimately that is, that achieves our goal of really enabling home buyers and taking money out of the investment property market. But to get there, there's a journey. And so I think, the biggest challenge we've had to date is probably on the capital side.
And has that been debt funding or just equity funding to grow the business? Or
yeah, so it's been equity funding to date, and will for the foreseeable future continue to be equity funded.
But just to be clear, it's equity as part of a managed fund, so it's not a debt fund. It's not a private credit fund. The investment profile that we have, it's effectively a levered return on the property market. I use the word levered because we're not taking inherent leverage, but it's a multiplier on the property market. Sprinkled in with our alpha, our ability to pick or price the right properties correctly. We try to target between a 12 to 18% IRR. It depends on how the property market grows, but ultimately that's the vehicle that we're standing up that kind of enables us to move from balance sheet funding, which is where we've been funding to date, to a retail rated fund that then unlocks the ability for our fund to be available for people who would typically take out property investment. And when you think about that, once you start to demonstrate proof points, and this becomes a genuine alternative to property investment, it really starts to get on the targets of wealth advisors, who want to provide great ways for their customers to get into this asset class. But when you go out and buy one property, you've got $200,000 that's exposed to that one single asset. It's a very risky approach to get exposure, whereas this is a much more sensible approach to do so.
So I guess you touched on this before, Robbie, that the kind of challenge, and it's a complex enough problem, made even more complex by this two-sided marketplace, kind of dynamic as well. How have you got the product out into the consumer's hands? And what's been the challenges that you've had of having to switch hats and mindset of we got to get the demand side, but then we got to get the kind of supply side as well. How have you managed to tackle those problems?
Yeah, Dexter, that's a great question. So effectively, we need both engines running simultaneously for us to make sure we offer a exceptional product. I think on the consumer side, we've got a backlog of, we call them Prime Plus customers. Just to give you a sense of who our customers are, average family income is close to $300,000. Average debt to income is 3.7x. So these are excellent borrowers that are coming to us out of the woodworks. And what we've been able to demonstrate is they are sticky customers. And so we've got an entire channel dedicated just to direct consumer. And then we have broker channels as well. So distributing this product through brokers and through the aggregators. And what's incredible is the brokers love this product in that we effectively double someone's deposit on day one. The broker gets to write a bigger loan, they get a bigger commission and less chance of clawback on
Yeah.
that commission. So, it's
Yeah.
truly one of these products that's win-win-win-win for everyone by design.
Yeah, so we see, what I would say are some kind of inefficient uses of capital. Lenders' mortgage insurance, I kind of think is probably the biggest culprit when I make that statement. What have you seen, or what has been the backlash from some of the incumbents?
Yeah, I don't know if there's I'm just trying to think. I don't think there's anyone who necessarily loses from like what product we're trying to create. I mean, it's the banks like it because they're able to sell more mortgages. Even the LMI providers like it because what happens is because we get stacked on top of LMI, so we can be used to take out LMI, but you can also be used to stack on top of LMI. So it allows more people to enter the market. The property investors like it because it's a genuine alternative. Hopefully, the public like it because it's taking capital away from the property investor, and arming the first-time home buyers. So it's just a reallocation of capital, not adding more fuel to the fire. We really, and even the regulators. I mean, interestingly, when we approached ASIC, they were actually quite excited by the prospect of this. We worked very closely with ASIC for about a year just to get the regulatory positioning right of this product because it's not debt. It's not it's actually not it's not a debt product. It's not a financial product. It actually sits as very interesting sort of middle between the two. And so yeah, we were
So
very
that
considerate.
kind of that year though to a startup, I mean, it's like life or death, right? and kind of kind of a small startup is doing the R&D for ASIC on a new asset class.
And a legal firm
It's
that benefit a lot. Yeah.
It does put a lot of pressure on you. What would you say have been, you talked there near earlier about your kind of customer success stories, but what would you say has been the biggest win or wins that you've had so far? Yeah. And then in terms of news, anything that you can share, or what can we expect from Frontya in the next 12 months or so?
Absolutely. So we are launching this managed fund. We are cheekily calling it a HEAT, not a REIT. It is a home equity investment trust. It is open to wholesale investors, or will be open to wholesale investors. And so if that is of interest, please be in touch. And then if you're looking to buy a property and you want to double your deposit, please be in touch. We can help.
Awesome. Well, that's kind of leads very nice into my last question, which is, where can people find out more about you? And so, Robbie, I'm going to kind of hit you with the details on the wholesale investor side. And then Nia, if you can hit with the details on the consumer side, that would be awesome.
Yeah. I mean, luckily our website has both. So if you go to our website, there's an investor section which details what's happening with our fund and the types of returns that you can generate and where you can learn to find out more. And then our website's also designed, from the customer side. So there's a calculator that is actually quite bespoke in terms of the technology that we built, but allows you to plug in your savings, your borrowing capacity. It tells you what the maximum purchase price you can possibly get, and then what that looks like if Frontya doubles your deposit. You can see if you qualify for our funding, and then you can also lodge an application as well. So the website's got all the tools.
If you're a customer and you are looking at the market and you need some help, if you're working with a broker, chat to your broker about Frontya. We love talking to new brokers and new broker groups about our product. And if you're not working with a broker, please be in touch on our website. We can certainly match you with someone that can help you.
We also get great talent listening to this show. If there's anybody who is listening who thinks, wow, this is a mission I'd love to be part of, where's the best way for people to find out about careers or potential opportunities with you guys?
Absolutely. So they can reach out to me directly, near@frontya.com.
Cool. Guys, fantastic to catch up. Really awesome to hear about the solution that you're putting together, and wish you all the best.
Thanks.
As always, folks, you can connect with me, Dexter Cousins, on LinkedIn. If you're new at the show, make sure you follow us or subscribe if you're watching on YouTube. If you're coming back, thanks so much for your support. It really does help me elevate great founders like Nia and Robbie and elevate great solutions like Frontya. Until the next episode, keep well,